the difficult truth here also is that when people are getting pre-approved, well, your max buying power for a 375 rate is going to be different than your max buying power for a 409 rate, right? So if we're looking at a fixed versus variable, right now you're going to pre-qualify for more if you go with a variable rate.
You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. And now, here are your hosts, Paul Stevenson and David Warren.
Hello and welcome back to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. My name is Paul Stevenson. I'm joined by David Warren, and thank you for being here. We want to give a quick shout out to our amazing sponsors, Gertin Poirier, Avocat Lawyers, Big Insurance in Westboro, CENTUM, and Easy Neon Signs. If you go to easyneonsigns.ca, get a Christmas gift, 20% off each and every order. Just use the code word TOREP. Dave, here we are. It's December 17th when this comes out. Last episode of the year, end of 2025. What's going on? How are you? Merry
Doing
Christmas.
well.
Happy holidays, David.
Happy Merry Christmas to you too. Well, we're still 8 days out.
We're getting there.
We're getting there.
Yeah, we're gonna start shopping
No,
soon.
I can't believe that it's that this is the last episode of the year that we are in December. I know we talked about this last week of can't believing that it's in December already, but it's pretty wild to think that the year is 2025 is done and almost over with. It's kind of wild. Year flies by. The year flies by. I'm gonna say it every year. I don't know. It seems like it even more so this year.
Yeah, I agree. This is now, this is episode 243. And that's only since we started actually tracking them. I think we were doing it for 3 years prior to that. So I think we're coming up on 8 years, maybe 9 years. But either way, a lot of fun, Dave. We're going to keep doing it. We're here. We started the year off, if you remember, by giving our predictions for 2025. So to kind of end the year out, just to kind of put the bookend at the end of the year here in 2025, we wanted to reflect. And we wanted to go over our predictions and the current stats. So let's use the amazing art of editing here. Let's take a review back at our predictions from January of this year.
I think it'll be more back to that kind of 10-year average, which I think is in that 15 to 17,000 range. I think the decrease in prime I think it's going to fall another I'm going to say 1.25% because of the uncertainty. I think there will be a couple holds in there, but I think in that 1.25 range. And I think from a listing standpoint, I will see kind of in that 3 to 5% price increase.
So I'm going to say number of transactions, I'm going to say just under, I'm going to say 14,500. I'm going to say average home price is going to go up. I think it's going to be fairly stagnant this year. I think just because of all these back and forths, the market will probably stay around the same. So I'm going to say a modest 3% growth in values, and I'm going to say a 1% decrease for the Bank of Canada. So there you go. Those were the predictions. Now, Dave, how do you think we did? You already know how we did. So why am I asking? You know,
I'm going to say that I think we're basically Nostradamus. We put money, put money on us. We were pretty well bang on. All those haters, all those haters eating those words when we post or made those predictions in January. We were getting a lot of hatred online about those numbers, telling us that things were going to be decimated, come to an end, not happening. You guys are idiots. The whole shebang. Oh
yeah. I just read a comment actually going through the YouTube comments from a couple weeks ago, and they were just pump, baby, pump, FOMO, not gonna fly, this and that. But here's the year-to-date results, David. Transactions, 15 to 17,000 on your end, 14,500 was my guess. Transactions to date so far, this was end of November, 13,075. We average that out to include December because we won't have the December numbers yet. Works out to be 14,263. 14,263. So I will say I was 300 off. I'll do better next year. We were both very close, and I think I would say we basically hit that one on the head.
You were pretty well bang on, and I was 700 sales off.
Yeah,
and I'd say it was
we were
pretty
close.
pretty good.
Pretty good. Oh, you increase. You had said 3 to 5. I said around 3. So far, prices are up 4% year to date. So you hit it right on the head. 3 to 5, 4 is right in the middle. Last I checked, and you hit it right on the head. So there you go. We're 2 for 2. Last but not least, Bank of Canada. How many rate drops we're going to have this year? You had said 5. I had said 4. So 1.25 versus 1% drop. So again, bullseye. Just throwing darts over here on toe rep. No pumping, no dumping, just pumping.
Just accuracy. Just accuracy.
180. So stats did come out for November. I want to show the quick stat. I know this is something everyone always appreciates. So I'm going to pull up the actual stats here for November. We can just talk to them quickly. So active listings, this is now year over year. So from November of obviously 2024 to 2025, active listings, 3,721. So that's up about 1,000 from last November. So pretty big increase there. 30% almost. New listings, 1,558. So that's actually not much higher than last year. It's about 100 higher than 2024. Sales activity in November, 880. So that was actually down almost about 12% from 2024. And last but not least, months of inventory, 4.2 right now, which is last year was 2.6. So many more months of inventory this year versus last year. What are you seeing, David, in the market? Is that surprising to you, any of those numbers? Where's your head at?
I'm kind of surprised a bit at the slower November. I would have thought it would kind of maintain the same trajectory of the previous of those previous months, kind of in that 1,000 range ish. To see it dip as much as it did, I was surprised. I'm not surprised like how I saw it in real time throughout the year, and with our brokerage of number of transactions coming in. How from a purchases standpoint, we still had a very active, as a brokerage, a very active November with like refinances and renewals and things like that. But I was surprised that it dipped so sharply. From October, the figures were down 18.2%. So that's kind of, that's a big drop, really. That I was the most surprised at. So, however, single family homes did continue to drive that price growth. And I want to say, even on our predictions of those numbers being up, 4% as an average, keep that in mind. That is across all product types. So condos, townhomes, freehold. Obviously, we've seen condos dip, that price come down a little bit, but that single family homes continue to drive that pace. Single family homes we're averaging 825,000, 827, up 4.8% year over year. And again, like we said at the outset, 4% year to date. Townhomes showed some price softness while apartments are facing the most pressure, like I said. With condo months of inventory climbing above 7. Any of those looking at condos, so if you're an investor or first-time home buyer or just somebody looking to purchase a condo, because, mostly in the downtown core, especially as we kind of hear those rumblings from the feds of the return to work mandate likely coming. Maybe you want to get ahead of it, of getting, a place downtown. Now might be a good time or to start thinking about it, with 7 months of inventory on the market, which is pretty wild. And sales being down more than a third year over year for condo sales. So that's obviously continues to be the hardest hit. So that's something that we'll kind of continue to keep an eye on. But on the opposite end of the scale, what's driving that average a year to date and year over year is really that single family home pricing, which continues to be up. I mean, we're up almost 5% on single family homes, which is, pretty high, in the grand scheme of things.
Yeah, the one thing that wasn't included in this month's stats was actually the days on market. And that was one stat that I was actually interested to see. Usually they have that kind of all-in-one summary of the stats, and that one wasn't included this month. But days on market in October was 28, and I would assume that is probably extended to maybe mid-30s. This is completely just off my own microcosm of information here, but I think I would say it probably has extended just based on the number of sales and everything else. That would be my assumption. But if anyone is listening and you have that data of number of days on market, if you can put that in the chat or in the chat, that'd be great. And I just wanted to say, Dave, the last few months, we've been getting a lot more interaction from listeners. And I just wanted to thank everyone who is listening and who is making those comments, because we do read them. We actually like responding, and we find there is actually a lot of really good conversation that goes on in the comments. So if you're watching on YouTube and you haven't checked it out, check out the comments. If you're listening right now, obviously like, subscribe, and then comment. And we'll continue to engage with all of you, and it actually gives us a lot of good content as well to discuss on following episodes and stuff. So if you have any questions or is anything you think of or disagree with or agree with that we're saying, throw it in the comments and we can we'll address it. We'll respond. We'll give a deeper explanation if you don't agree with our opinion. But just wanted to say thank you. It's been a good year for interactions with listeners, which I know you and I both appreciate.
Yeah, I think we just some stats. I think we had about 10,000 out, close to 10,000 hours of watch time on YouTube alone, not listening, anyone listening on your podcast platforms. And I think around 250,000 views again just on YouTube. So, really do appreciate everyone kind of tuning in and really kind of being engaged with what we might have to say throughout the year.
Well, now that we're able to predict the market with extreme accuracy as well, right?
We're predicting the future.
Yeah, I did actually. I have my crystal ball here, my pen 3 crystal ball. No, but in January we'll definitely be making predictions again for 2026, and at that point, you just basically throw your money in the market and do exactly as we suggest, and you'll be okay. No, but speaking of numbers, the inflation numbers actually came out as well for November. So headline inflation remained steady at 2.2% year over year in November. That matched October's pace and coming in slightly below expectations. Did you want to touch on that, Dave? I know you had a few key points you wanted to go over.
Yeah, for sure. So the headline inflation, as you just mentioned, came in at 2.22. The estimate was 2.3%, and the average core inflation was 2.8%. The estimate was 2.9%. The prior was 3%, and that was revised up from the original metric, which was 2.95. So once they actually kind of dove into everything, now economist David Rosenberg commented, when you strip out the ridiculous mortgage interest rate entry that makes up the CPI was just 0.1% up month over month. And this metric is running barely above the midpoint 2% target when stripping out mortgage interest costs. And there's been a lot of debate of whether that should be included or not. So really kind of this month delivered a meaningful 20 basis points improvement on the Bank of Canada's preferred measure. Really what, we're looking at is kind of continuing to watch that, those inflationary numbers in connection with, GDP figures, employment figures, and kind of how that continues to roll out. Now, with kind of, as we've said in the past, with all these numbers that are positive for the economy, they result in higher rates. They kind of go in opposite direction because of that. And that's tied, like we keep always telling people, that's tied to the fixed rates, but not to variable rates. And so there's been a lot of kind of commentary of, that variable rate mortgages are poised again to be a very strong product throughout 2026. In the last 2 weeks, last week's episode, we mentioned about the bonds, and we talked about the bonds spiking up that 19 basis points on that Friday. And again, a further, I think it was 6 or 7 basis points on the Monday. What ended up happening is as we talked about last episode and throughout the week, fixed rates coming up predominantly across the board, but that the variable rate discounts actually improved. So as fixed rates went up, that discount to prime on variable improved. So there is a lot of talk of that becoming a more interesting product again. It was over 50% of mortgages throughout the pandemic people were choosing variable rate mortgages. Obviously, they felt the impact of that increase of bank prime throughout, through the tail end of the pandemic in the last few years. But now has come back down that full 1%, and people feeling that lighter rate and those, that softening. It'll be interesting to see if that continues as far as like that interest in variable throughout 2026 and what that percentage of people that said they'll never take variable again after riding that wave who choose variable again. And that'll be an interesting conversation, because I have these conversations on a weekly basis with people that are like, you know what, I went through that roller coaster. It bit me in the ass. I felt it. It felt
Let's
that
hop on
wave all the way
again.
up. That my payment was sky high. I don't want to go through that again. You provide them with the fixed rate comparisons and of the different terms and the variable. And they're like, well, it's we're looking at a 1% spread between the fixed and the
Yeah.
variable. That's that's interesting. That's it'll be interesting to see how that kind of plays out through 2026.
Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big, protect what matters most. Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction at Gertin-Poirier Avocat Lawyers. We love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you for an effortless client experience that opens doors. Call us at 613-744-4488 or visit our website at gertinpoirierlaw.ca. Let's get to the heart of your deal. Are you trying to grow your mortgage business? CENTUM has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with CENTUM. Learn more at joincentum.ca. This episode is brought to you by Easy Neon Signs. Visit easyneonsigns.ca and use the promo code TOREP, TOREP, to get 20% off each and every order. easyneonsigns.ca, Canada's finest custom neon sign maker.
Yeah, this week specifically, and last week, I guess, technically, like a week. This week since last episode, every client that I have an APS or a renewal conversation with, it's all been variable. And let's, the difficult truth here also is that when people are getting pre-approved, your pre-approval, your max buying power for a 375 rate is going to be different than your max buying power for a 409 rate, right? So if we're looking at a fixed versus variable, right now you're going to pre-qualify for more if you go with a variable rate from the beginning, right? So that is also something that people take into consideration. Oh, not that it's a huge difference right now, but if that spread gets bigger and it becomes a 0.5% or a 0.75%, people are very likely going to lean towards not only the lower rate, but also the higher purchasing power, right? So it's kind of like a double-edged sword in that sense. But to your point, like if you can right now, have clients in the kind of 3.75 range, let's say for variable that are in that kind of insured bucket in that range, right? Prime minus 0.7, prime minus 0.75, something like that. Those clients are comparing that against, 409, 414, and it's kind of a no-brainer. You're like, okay, well, we're getting a 0.35% head start here. Even if Bank Canada does increase rates, which is not as we were planning to allude to, there's probably going to be a holding pattern here for potentially up to 12 months where you're kind of sitting in this sweet zone of, okay, well, if I'm going to sit at 375 for a year, like most people are going to take that all day, knowing that you could convert it later, or potentially there might even be another one drop in the, we'll talk about that in our predictions in January, but there could be another rate drop potentially next year, even if it's one that, then you're sitting at 3.5. I mean, nobody is going to be too upset about that. I would assume.
I'm not going to get into predictions for 2026. We're
No,
leaving that. We
not.
gotta leave that for our first episode back. So I'm gonna punt. I'm gonna punt my commentary on your on your statement.
Yeah. So, I mean, ultimately, this is a summary of basically touching on that Bank of Canada, but Bank of Canada is widely expected to keep the policy rate unchanged for an extended period as inflation holds steady and core measures ease. So November CPI showed a headline inflation of 2.2, as we mentioned, the lowest pace in recent months. So analysts say there's nothing in the data to raise concern for the Bank of Canada, suggesting policymakers see inflation close to their target. Food price inflation remains elevated. Shelter costs have softened. You touched on all this. Market expectations now lean towards a prolonged rate pause, with rates likely to stay put through much of 2026. Higher borrowing costs are still influencing economic behavior, and the central bank remains cautious while monitoring evolving risks. Now, assuming there is no rate change, assuming there is no rate change, Assuming there is no rate change.
Good thing you hit puberty at 42.
Assuming there is no rate change in 2026 for variable, I would have to assume, and this is again speaking to some lenders, like most lenders I've spoke to, and it's been at least a handful now, have all suggested or at least implied that they expect fixed rates to drop again come March, April, kind of that race to the bottom in the spring market. If everything's equal, obviously different conversation, but to what we're saying, like I would expect going into that spring market, it's probably going to be a 70-30, 75-25 clients taking variable versus fixed just because of that metric, just because of the fact that it is, even if, if fixed rates get below 4, then it's a different conversation because then I think people feel comfortable taking that maybe slightly higher fixed rate knowing they're sub 4. But there's something about that 4 in the front, that 404 versus 399, that's a big in people's heads mentally. I think for clients, that's a big like shift, like, oh, we're
it's
under
like the
4%.
pricing trick.
Okay, let's take
it's
it.
like the price tag trick, 399 instead of 4.
Yeah, way better. Way better. Couple comments, Dave, from last week's episode that I thought would be worth mentioning. And again, just speaking to the not only comments themselves, but actually a lot of the listeners are obviously very informed, especially, getting great content from different people creating content online, but well informed. And some of the comments I thought were very accurate. DAR 1299 says, we all know the Bank of Canada will protect the banks at all costs. Politically, no one wants asset prices to go down. If asset prices go down, then so does confidence. Then spending. Then the economy slides along with tax receipts where the government can't service its debt. So, that is a real risk right now with everything that's happening. Another person says they're a realtor and they're telling their clients not to do anything until 27, 28. Just wait. The worst is yet to come. They're saying, wait till it all crashes. So in that sense, like I kind of get the sentiment, but timing markets that far out is like near impossible. And if someone needs to move, has stable income, plans to stay put long term, waiting 3 years hoping for a crash can be just as risky as buying at the wrong time, So the right answer is very personal. We always talk about this, but depends on cash flow, job security, et cetera, et cetera. But
also, what market you're talking about?
Telling someone to wait 2-3 years to buy a house is kind of crazy, especially if you're a realtor. That to me sounds ludicrous. Like,
but also, what market are you talking about? Like, yes. I don't know if this person mistook the Ottawa real estate podcast for the GTA real estate podcast, but if you were speaking to the GTA and you were not in a rush to buy because of, like you said, work-related, family-related reasons, yes, if I was in the GTA, I would be waiting because that market is going to continue going down and likely to slide another 10%, 15% on prices as developments cease, as the sales keep drying up, et cetera, unless there is a real change in interest or population with, interest and investment interest within the GTA. But with how the foreign buyer ban has been going on, with the reduction in foreign students and all of that, I don't see the GTA improving through 2026. So to that person's comment, if they're speaking about the GTA, which is a singular market, albeit the biggest market within Canada, but if they're talking about that, then sure, wait till 2027. Absolutely. If you're talking about the Ottawa market, I would, if not home ownership isn't for everybody, like we keep always saying, but if it is something that is of interest, when looking at the stats within Ottawa, the likelihood of a slide is unlikely. So if your time is right and you're looking to a non-condo in Ottawa, it's likely you're going to be sooner rather than later better off than waiting 3 years to purchase. So again, it all depends on what market this individual is talking about.
Yeah, all very good points. Another comment here from Jeff O'Toole, one of our top listeners, says, why is the real estate the only thing we think gets better as the price goes up? You buy a cheaper car, great. Buy cheaper clothes, fabulous. Buy a house that gets cheaper over time, unfathomable. How absolutely screwed up society. Canada is on a one-way train to nowhere. So I did actually respond to this, and then there's been a few more responses since that, but ultimately, because of, especially in Canada with the boom in immigration, new builds do lag due to strict zoning restrictions, slow approvals, and this creates permanent shortage, essentially. So demand rises steadily and supply doesn't. So prices track inflation, wages, building costs, which all go up over time. So although short-term dips do happen, so we're kind of in one now, without a major economic crash, the long-term direction is up. So that's why real estate rarely gets cheaper here. It's basically supply and demand. Ottawa also is a very insulated market. We've talked about this countless times with government, tech, etc. The demand is always growing and the supply isn't always there. So that, at least in Ottawa, is kind of always going to drive that price up. We've seen it. I mean, you look at the last 60 years of data in Ottawa, it's always, somewhere between 1 and 5%. I think after last year now, I think we have 3 down years in the last 60, something like that. Like it's a very consistent growth. So I think that speaks to at least Ottawa, why, the expectation is for the price to go up, because historically it has, right? So
it's great that this listener comments all the time. I think for the last 4 or 5 years, everything is always extremely negative, which I think is always comical too with reading those questions from that specific listener. I think really at the end of the day, to your point, like it's all supply and demand driven. Our immigration, even though we've reduced our our immigration levels, we still had about 1 million in the population added to our population, rather, with actually having housing kind of cease, like development cease, if you will, for purchase supply. We've had rental supply increase and added because that's where the stimulus from the government and the programs from the government is being directed through CMHC, et cetera. But we're not having single family homes being developed. So again, that's what's driving that 4.8% within Ottawa, and average price points being at $825,000. Well, that's due to a lack of supply of single family homes, which is what people need in order to live in. And the rental supply is not addressing the larger family needs, which again puts more demand pressure on that product type.
Yeah. I think leading into 2026, we're going to do a few live episodes, I think, next year. At least I'm just throwing it out there. Dave and I didn't discuss this, but this is my plan. I think having listener interaction where we could actually have like live Q&A. We've done it a few times, and it's actually, I think the last one we did was like episode 150. So it's been about 1.5 to 2 years since we've done one. But I know they were well received. More guests coming in 2026. That was kind of some feedback we got last year that they wanted some more guests. I don't know if we really lived up to that this year, David, but
yeah,
we'll be back. We're buzzing. We want to give a quick Christmas holiday shout out to you, the listeners. We just want to say thank you. We really appreciate each and every one of you for listening each week, tuning in, commenting, interacting with us. And again, if you ever have questions about mortgages, we're always here to help. Our contact information is in the comments, and be sure to like, subscribe, and comment. And Dave, we got some holiday boosts just to end the year here. Are you ready?
Boost me.
Have 4 today. 4 boosts for the holiday. A couple holiday boosts. Here we go. Number 1. Which reindeer likes to clean? Comet. Comet.
That is a good one.
Cleaning. It's a cleaning product for those youngins. Number 2. Why does Santa use the chimney? It suits him. It suits him. Your 4-year-old son would love these. And number 3, if there were 11 elves and another joined them, what would he be? The 12th. The 12th. And last but not least, number 4, why don't you ever see Santa in the hospital? He's got private health care. Private health care. Yeah.
These do hit home as I listen to Rudolph the Red-Nosed Reindeer, Jingle Bells, and all the other songs literally on repeat, like 8 or 10 times in a row. It's becoming mind-numbing. But anyways, I digress.
Anyone still listening, comment in the comments, make a note, your favorite holiday movie, Christmas movie.
It's not Die Hard. I don't know what you're watching.
That's the go-to over here, usually. Die Hard and Elf. Thank you, everyone. Again, 2025, great year. 2026, coming in hot. Thanks again to our amazing sponsors. Gertin Poirier, Avocat Lawyers, Big Insurance in Westboro, CENTUM, and Easy Neon Signs. Merry Christmas, Happy Holidays. We'll see you next year.
Deuces.